Welcome traders to yet another educational video of Nifty Short Term View, episode number 39. We can see a complete sea of red today. Mostly all of the sectoral indices have closed in the negative territory, and special thanks to IT pack and the metal pack, as metal has been able to close 4% down and the IT pack is almost quarter to 6% down. Yes, Bank Nifty has underperformed as well. Bank Nifty has closed almost 865 points down. But although IT and metal, I think, were the main laggards in today's correction, where Nifty was able to close almost 456, 457 points down. And without a delay, let's start the analysis for today's educational video. In front of us, we have the current month Nifty futures daily and the hourly time frame charts. The one on the right is the daily chart and the one on the left is the hourly chart. And if you have seen my previous educational video, episode number 38, I had clearly shared that this pullback which we had just a couple of days back on 17th May, this is just a pullback. My view was very clear that the overall trend is down and this is just a small pullback on the upside, as the participation was very, very low. I had clearly mentioned that when the price was rising, volume was coming down, and I had also given levels where I had shared that in case if the pullback wants to extend, then we'll need at least a couple of candles closing above 16,300 levels properly. I think this is the first candle over here. If you can see, this is the first candle which has been able to close above 16,300. But this candle also is just a high wave candle. Generally, a high wave candle comes at a point when the entire market is overstretched either on the upside or either on the downside. And this was a red candle, and you can see that the close over here was mere 16,303.80. And after that, the next close was below 16,300. So there was not a positive candle over there. Plus, we didn't see a couple of candles closing simultaneously with each other. And why market was not able to sustain above that, the main important reason was that this was a 23.6% Fibonacci retracement on the daily chart. You can see over here, and exactly from here, market has dropped. And even in this zone, for me, there was a resistance over here, and above which, if it would close and sustain, we probably could have inched just close to 16,400 or maybe 16,500, nothing more than that, because I had clearly mentioned that this is just a pullback, because the overall trend is still down. All right. And we can see today, surprisingly, even I had not expected this, that there would be a sudden gap down, and after a gap down, we kept on falling lower and lower and lower. All right. Yes, we have pulled back a little bit from day's low, but overall it is a very bad close. And special thanks to the Dow Jones, because yesterday when the Dow Jones crashed, the Singapore Nifty itself was more than 300 points down at night. Now, what is going to happen ahead? According to me, the downtrend is continuing. No surprise about that. If you can see properly, RSI in the hourly chart is close to that 30 oversold level. And if I open the 15-minute chart, in 15-minute chart, we do have some sort of positive divergence. I'll just convert this candlestick chart to the line chart. We can see we do have a lower low over here, and we do have a higher low in RSI. So yes, there is some sort of possibility of a pullback. And in case if we do pull back in the early hours tomorrow or maybe midday, then according to me, the resistance level which would stop the market going higher would be anywhere between 15,900 to 15,922. This could act as a strong resistance for the short term. And on the downside, in case if we continue falling and if we close below this level, which is 15,700, all right, if we close below this, not intraday dip, if we close below and the market keeps on falling, then according to me, the next level which could be tested on the downside will be somewhere around 15,582 and probably somewhere around, you can say, 15,370 or 15,367. All right, these are the two levels which can be tested on the downside in case if the trend continues to be, drifting downwards. Now let's check Bank Nifty. Bank Nifty, on the other hand, is looking slightly different, not that much different, but slightly different. But yes, overall trend is down, and I had clearly mentioned that the trend in Bank Nifty is also down, and this 2 days pullback is just a pullback. And I had also shared that we do have a long-term trend line resistance, a very strong trend line resistance in my previous video, because this trend line is not a just 2-month-old trend line. This trend line was holding on since 2 years. And it was very clear that this zone would act as a very strong resistance, and it did. And it did act as a very, very strong resistance, and we can see the result. The next day we do have a gap down. All right. Obviously, even I didn't think about it that we would have a gap down and Bank Nifty would close more than 800 points down, but nevertheless, it did happen. It seems the bears are back and the market is in grip of the bears. And let's open the 15-minute chart. In the 15-minute chart, again, once we do have a lower close in price and the higher low in RSI. So this is a clear-cut positive divergence. Now, in case if Bank Nifty tries to rally tomorrow in early hours or maybe in midday, somewhere around that, I think this entire band could act as a short-term resistance, which is between 33,559 to 33,350. And this entire short-term band may act as a resistance for the price. All right. Now, say for example, if this particular price drop which has happened today, if it continues to move downwards, what could be the outcome? Where would the Bank Nifty stop, or where would the Bank Nifty test? Which levels could be tested? So according to me, bare minimum, we need to close below this particular level, which is 33,000. All right. Bare minimum, we need to close below that. If this close happens, first of all, if this fall happens, all right, first we should test 33,000, which is possibly close to 270 points lower from here. And if we close below that, then the next level which could be tested could be 32,562 and maybe probably even lower. But all these levels, like 31,976, but all these levels will be achieved only and only if we close below this particular level. And this level is not right now over here. It is more than 270 points lower from the current market price. So just keep that in mind. One thing we need to understand, apart from levels, apart from trends, is the volatility, my friends. So this current volatility, which we can see over here in last couple of days or last 2-3 days, especially in the Nifty, if you see what sort of volatility is this, that we close one day back at 15,847. We open gap up by 50 points or something. And from 15,847 or from there, we close at 16,275. And next day we consolidate and suddenly we have a drop. So if anyone is trying to carry trades overnight, it's a request to all of you, my friends. This is not a time to carry unhedged positions. And if you are not a fan of hedging your positions, at least minimize your position sizing by minimum 50%. If you make lesser amount of money, it is completely fine. But when massive gap up, gap downs happen, it's not a gap up of or gap down of say 50 points on Nifty futures or 70 points or 25 points. It's not like that. This is something abnormal. So when these sort of gap up, gap downs do happen, we should be very, very careful, because just one wrong trade can take away the profits of last many trades. And one thing can also be done is that just keep your trades strictly to intraday. As soon as 325, 320, let's click on your watch, just close your trade, get out of it. Simple. And if you are a swing trader like me, then try to see that you don't carry more than 50% position sizing. So for example, if you're trading 4 lots, just trade 2 lots. That's it. Nothing more than that. All right. So I hope this particular analysis video has helped you to understand where the markets will head in the next few days. And if you think it's adding value, Let me know by your comments below in the comment section, and do share this video with other people who might be able to understand the market in next few days, because everyone knows that the current way market is moving is very, very difficult to trade and make money out of it. All right. Trade well, trade wisely, stay safe. Thank you.